Good morning, everybody. I love it. Room's already filling up a little bit. That's what I'm talking about, guys. How we doing today? Hey, Chariot. Nice to have you, Luciano. It was very low on volume, Luciano. Let me see if I can't adjust my settings here. Give me 1 second. Thank you for telling me that. Oh, you know what? There we go. I think what happened yesterday, and I apologize, thank you so much. Um, it was picking up from my headset that was sitting next to me and not the microphone on my camera. So thank you for telling me. I had to adjust that setting, Luciano. Guys, I'll tell you what, if you had trouble hearing yesterday's video, I will say the exact same thing again today. How does that sound? Today, I will start the class off the same way I did yesterday, and we will go to forexfactory.com/calendar and we will ask ourselves, is there anything that's going to be presented in the news world that could affect our good time? And guys, at 10:30 a.m., there are crude oil inventories. If you are a crude oil trader, guys, if you're a crude oil trader, what does that mean to you? That means that the market may go just absolutely bonkers at 10:30. That there may be somebody with way more money than you waiting for that report to come out. Has everybody seen Trading Places? Eddie Murphy, Dan Aykroyd? Remember the mayhem when the orange juice reports came out? Guys, crude oil inventories is no different, except I don't believe Eddie Murphy is involved. It's a great opportunity to sit on your hands and do nothing. That's it. That's all it is. It's not a, hey, go short if it's bad, hey, go long if it's good. It's just, man, I know that the men and women who control the market, and guess what? It's not you. This big crowd with all the money. The big crowd with all the money. And Pete just said it too. They may be jockeying for position a little bit before the release, and then they're likely to have a reaction when the release is given. So we don't check news. I don't check news to make a decision. At least, Ed, at least. It's on my list of movies that I won't go past if it's on TV. That one and Tombstone. I sent my wife a picture of Tombstone on the TV the other day. I was like, how am I ever supposed to get anything done if they keep showing this movie? So guys, news is the first stop because we just want to know when the reaction is. That's it. And you guys are saying that crude is already going a little nutty. Whoops, hold on. Well, that doesn't look too nutty, does it? That's not too terribly crazy. You guys want to see something? Oh, that didn't fit the rules. Or did it? So even in the crazy, here we go. Here's where I get smug with you guys. Even in the crazy, the patterns work. How cool is that? Even in the nuts, in the oh my gosh, in the indecision, the patterns work, ladies and gentlemen. So you need to learn a couple patterns. That should be your goal initially, is to learn patterns. I talk about on Ninja Trader. You took that one, Pete? Nice. On Ninja Trader, ladies and gentlemen, there is one trade that teaches you how to read your indicators. Victor. There is one trade that teaches you to recognize a couple advantages so that you can make good decisions. Now, I had a conversation with a gentleman this morning, and he used the phrase, not Nexgen approved trade. And I want to tell you right now, there is no such thing as a Nexgen approved trade. There is no such thing as a trade that you can or cannot take. We are not the trade police. My job in this room will be to teach you to recognize a couple advantages, to give you a pattern, a rule for entry as a brand new user, so that you can take this very basic knowledge, this awesome foundation, and create a trading plan for yourself. It's not my job to tell you what to do, guys. I don't need that responsibility in my life. But I give you this plan, and this is what we call the KISS plan, ladies and gentlemen. And the KISS plan is a stepping stone in your learning journey. The KISS plan for Ninja Trader focuses on one high probability trade. One trade that you can go back and test and you can prove that it wins more than it loses. One pattern that you can historically verify creates an edge for you. From this one trade, it'll be amazing. Ed, I got you. From this one trade, you're going to start to see other opportunities. From this one recognition of advantages, understanding how to identify momentum, recognizing when there's stuff in your way, and being patient enough to wait for your entry when it's not there. That's what I teach, guys. You guys do amazing things based on this very basic foundation. And Wayne, it's good to see you back in the room, and I can't wait to share your chart when we start looking at chart reads. So what I'm going to do this morning, ladies and gentlemen, is on Ninja Trader, we're going to focus on a high probability trade. And the recipe for that trade is momentum, clear path, and entry. It's only 3 rules. Those 3 rules happen on only 2 charts. And going back to what I was saying, you're going to see people with more charts. You might even see people with less charts. It is your right as a day trader to take this knowledge and instill it into your trading plan. For the very basics, for the brand new user, we're learning to read our indicators. And we're learning to read our indicators in the path of least resistance. Can I reload your video? Jen, I'm going to give you my Zelle. You're going to send me a nickel because this is such an inconvenience for me. Is that better? Boom. Should be good. Guys, always tell me if you can't hear, if you can't see, if I'm breaking up. I don't ever want you guys to miss out on anything because I usually say things only once. I never go back to repeat anything, ever. Ever. So guys, it takes 2 charts to find a high probability trend trade. That's it. And even more importantly, on this big chart, your large chart, the slow chart, I'm in a lying mood this morning, Miss Jen. It takes the first bar, the most current dynamic Renko bar. You will be able to define the direction of the market so that you can give yourself the advantage of trading with the trend. You will be able to define the momentum in the market, making sure that rule number 1 is in place. And you will be able to define the areas in the market, whether or not there is a challenge in your path that you need to get past or get a roll from. Guys, on one bar on the large chart, you will have the advantage of momentum and clear path. This is your core. Once you can identify these, it opens the doors for everything else. Your first trade with Nexgen, the first trade that is taught, is going to go to the smaller, faster chart. This is a refinement chart inside of all of the inner workings of this one bar, maybe 20 to 30 bars on a smaller, faster chart. This is how you're going to define your entry for the highest probability trend trade ever. This is how you are going to reduce risk. This is how you're going to maximize your profit potential. And these 3 rules on only 2 charts, it's nothing more than a pattern. That's it. It's a pattern that repeats itself daily. It's a pattern that you can go back and study historically. It's a pattern that you can build confidence in and say to yourself, when I have momentum, when the path is clear and I can define my entry area, I have the highest probability trend trade ever. This is the one that I can't wait to take. Now, because you can identify momentum, path, and entry, you're going to find most of the time one of those advantages isn't as present as you wish that it was. That's going to push you into what we call a medium probability trade. This is the second trade on the plan that I give you Nexgen user or the Ninja Trader users. And because you can understand momentum, because you have no questions about whether or not the path is clear, and you can define the best of the best entry to reduce risk and maximize profit potential, you can say, when 2 out of 3 of my advantages are gone, I choose not to trade. Nobody can make you trade. Nobody can make you enter the market if you don't have momentum. Nobody is holding a knife to your throat. I hope. If they are, blink twice if you don't have a clear path. So you're in control. Don't ever forget that. You're in control of what you do. They're in control of what happens. But when you know what's working for you, when you know what's working against you guys, it's going to help you make decisions on whether or not you enter. It's going to help you make decisions on how assertively, how aggressively you need to manage your trade. So everything boils down to momentum and path, guys. Everything. And you're going to see it in this room all day long. Momentum and path, momentum and path. We're going to go through it, and we're going to learn the trigger line and the Fibonacci rules for when it's okay to trade. NinjaTrader users, this is your moment right now. Tomorrow in the room, it will be 100% trading view. There will be no NinjaTrader chart reads. There will be no NinjaTrader rules. It will literally be as though you guys are sitting in my office watching me day trade the NASDAQ. That's what tomorrow's going to be. So ask all your questions today. Please, please, please. We're going to learn the rules, guys. Everybody in the room can simulate. You can practice. If you came into the room and you started scrolling through the chat box, you can see there are about 5 different people posting 5 different charts, and each of them got feedback on everything that they did, everything that I saw, everything that I thought, everything that followed the rules, that didn't follow the rules, and even ways to do it better. That's how you get to where you want to be ASAP, guys. Post in the room and take advantage of the idea that you get a private session with me every time you do. The one thing I ask NinjaTrader users, do me a favor. It'll be 9. I'll be here at 9, Robert, and we'll go over the trading view plan, and we'll take the whole first 30 minutes to make sure that we're clear on what it is, how we're going to read the large chart, what entries look like on the small chart. And then, guys, when that bell rings, you're going to find out that 90% of the day is doing a whole lot of nothing. And for some of you, that lesson alone is going to be worth its weight in gold, because you're going to be able to say, oh my gosh, he's not in the market every tick. Every move is not his move. Every turn is not his turn. He's waiting for an advantage. And I'm excited about tomorrow. But we're going to talk NinjaTrader right now, guys. If you post in my room, guys, I love it when you show off. NASDAQ, Claire. Because it's minute bars. It doesn't matter if it's NASDAQ, S&P. Doesn't matter if it's crude oil. I've traded all 3. The rules are exactly the same. And we'll find more opportunities in NASDAQ than we will the other 2. I'm very confident saying that. So, guys, every time you post in my room, this is what I ask NinjaTrader users. I want you to describe momentum. How did you read those strong trigger lines? Was the advantage present? Point to it. Tell me that you had that advantage. Because if there's a mistake in your read, we'll fix it. I promise you, we will fix it. And I want you to define the terminations that you see. Is it the potential to break? Is it a clear path? Are you trading directly into something that could stop the market? I'm not going to chastise you if you make a mistake. I'm going to teach you how to fix it, but I have to know what you saw to know if it needs fixing. And then finally, define your entry. I'm going to give you guys a phrase when we talk about entries that if you write that on a piece of paper in front of you, you will be absolutely amazed at the accuracy that you call your shots and find these trades. Tell me why you did it. Tell me where you did it. And what happens, guys, is every picture posted is that private session. I'm going to go back to momentum, termination, conditions, and entries. And when you do it well, and you will do it well, when you do it well, your annotations are going to serve as a recipe, guys. Your annotations are going to be exactly what you need to describe the pattern that you can prove wins more than it loses. So when you post in my room and the feedback is, hey, don't miss this trade, what it means, sounds good, Wayne. What it means is that you had strong triggers. And that it means that it had the potential to break, but you might need to manage. It shows me you have an understanding. And then your entry, entered at a pullback on an area inside of triggers. And guys, this is the recipe for success as a brand new user. Not only is it an amazing trade, but it teaches you to read momentum. It teaches you to recognize trouble areas, and it teaches you to define the perfect entry. So do not be stingy with your annotations, ladies and gentlemen. The more you tell me, the better your feedback will be. The second thing to do to get to where you want to be is keep it simple. I can't, oh, you're okay, Derek. Go get you a new one. Hey, I don't know what you were looking to spin. Easy trading computers, and I think there's a lot of people in the room that'll back me on this. They are designed by Eddie for traders, to run for traders, to handle that load. We have a lot of clients using those, and nobody has ever come close to being upset about it. And if I'm not mistaken, there is a special. They do offer a discount to Nexgen users. Let me see. And I don't know if this is what you want to do. You don't have to. I'm not forcing you into buying a computer. But this is the guy. This is the guy that. Where would that be? Join our community, resources, pricing, trading guides, evaluations. Oh, check out Easy Trading Computers, and before you purchase, ask him. Go, hey, do you do something for Nexgen users? I heard about it in the room. He's freaking amazing. John, I think 3 of John's computers are those as well. So, Robert, you took 2 trades last night, won both. However, you didn't annotate them, but you logged off happy. Yeah, make sure you share them. Let's go through them. All right, guys. So keep it simple. If you are a Nexgen NinjaTrader user, you have the KISS plan designed to optimize your chances of success. Once you can execute this first trade, the second trade becomes easy. Once you can execute the second trade, guys, all the doors open up. So I dropped the plan. Let me drop the plan and the spreadsheet in there. There's your spreadsheet. There's your plan. And guys, I'm going to lean on NinjaTrader a little bit this morning because it is going to be all TradingView tomorrow. That is everything. And when I say this, guys, I want you to know that I'm being as sincere as I can ever be. Between the plan, giving you the best of the best chance of success, between the spreadsheet, showing you what it means to have the basic rules met, showing you what it means to have the basic rules not met, giving you over 500 pictures of client trades. You guys remember, if any of you are old enough, hey, let me talk to one of your clients. Let me talk to one of your clients. Let me see if your clients are really making money with this. Guys, you're sitting in a room with our clients. And in this room, our clients continually post trades where they use momentum and nothing in the way and find a way to just keep getting paid. So does it work? I'll say it about as arrogant and cocky as I know how. You're darn right it works. You have everything that you need to be successful with this software. You have a plan. You have a study guide. You have non-stop feedback, Monday through Friday, 3 hours every day. The only thing that you don't have, ladies and gentlemen, is the repetition for it to feel easy. You don't have the time on the pond, as Pete says. You don't have time in the seat to make everything feel second nature. That's where the repetition comes in. That's where Simulator pays huge dividends. Stop putting the pressure of making money. Stop putting the pressure of making money on yourself as a brand new user. Put the pressure of following the process, guys. And then when you prove you can only take the correct trades, that's where you go test it out. You've been paying your bills for 2 years, right, Ron? There's a lot of people paying their bills with Nexgen. And it all starts with a high probability trend trade, guys. So 3 rules, only 2 charts, and remember who's in charge. It's not you. The big crowd is going to define direction, guys. They're going to tell you which way you need to be trading through that large chart. The large chart is going to define the momentum, making sure that you have that advantage in play. They're going to create it. And these are the same people that react to the areas on your large chart. Don't fight them. They're not going to fight it. That's where they make decisions. You're going to have all of this. Your small chart is a small crowd, guys. These are the men and women that fight everything the big crowd wants. That's why we use them for entry, because they create what's called a retracement. A little push down when everything says up, or a little push up when everything says down. These yahoos fail 70 to 80% of the time. Rule number 3 puts you into the market right at their failure point, where it's most likely to happen. That's how you enter the market. to trade with the large chart advantages. And one more reminder, this is for you, Ron, it's been a while. You are not in charge. Sharks are the big money investors. Sharks create trends. Sharks establish momentum. Sharks react at areas. Your job is to be a remora. You are a small fish in a big pond. Let this guy or gal, I'm not sure, have to look back at the fins there. Let this person, them, they, I don't know what you want to call it, it's a shark. Let them give you all the advantages and just take a piece of what they create. That's the path of least resistance. Brand new users, that's what we're going to focus on today. No worries, Victor, we'll get you. So guys, we're going to go through rules, and when we're done with rules, we're going to go to TradingView and we're going to talk about the TradingView rules. And when I'm done with the TradingView rules, the rest of the day we'll be looking at the live market and looking at the stuff that you posted in the room. So the indicators you will use, NinjaTrader friends. Both charts have triggers. Triggers account for 90% of the greatness. Triggers show up in everything, guys, and there are two triggers. There's a small trigger, 2 solid lines, and there's a large trigger, 2 dashed lines. You're going to use these trigger lines to define momentum. You're going to use these trigger lines to define termination conditions, areas that could stop the market. You're going to use these trigger lines, the large specifically, to define your amazing entries. So trigger lines show up in everything you do, and the only thing you need to know is that these are small and these are large. Large chart will have areas. Horizontal lines that run across the large chart and the small chart. Every area has a name, guys. So if you see a negative number and a magenta line, that's hot pink for you 80s kids. It means that there was a loss of momentum right at that pivot. That even though the buyers were in control, the sellers stole their momentum and pushed it down. This line doesn't print till 2 or 3 bars down, but every time you see a magenta line, you know that there was a loss of momentum. It's the same at a low. A cyan line, that's baby blue. Negative number means absolutely nothing. It's a byproduct of the calculation. Line prints, you can say there was a loss of momentum at that line. You're going to see red Fibonacci resistance. It's that red line that runs horizontally across your chart. When the market is trending up, ladies and gentlemen, this is an area where the large crowd might make decisions. This is an area that could stop the market, that could create a bounce. You know about it long before you ever get to it. We have Fibonacci support. It's a blue line. It does the same thing in a downtrend, guys. It is visible long before you get there. This is an area that could create a bounce. This is an area that could reverse the market. You're going to see yellow 1-to-1s. Now these are Fibonacci areas that print in the moment. These calculations run all day as the market creates pivots. This is an in-the-moment fib, and if the market is trending up, it can behave as resistance. If the market is trending down, it can behave as support. And then finally, you have a mid-band. And a mid-band is a moving average, and when price is above it, it's going to turn green. That green mid-band may behave as support. When price is below it, it'll be magenta. That magenta mid-band may behave as resistance. So guys, areas and triggers. That's all trading is. And then finding your pattern using these indicators. So we're going to start with strong trigger lines. Rule number 1. Because rule number 1 will give you the advantage of... It's easy trading computers, Derek. And I don't know anything about pricing, and I don't know what it will cost to get you into one. But I'm pretty sure if you mention Nexgen, they do give you a discount. But I know John has 2 in his office, and his wife Melinda has 1 in hers. It is the Bentley of trading computers. It used to be Falcon back in the day, and I believe they have unseated them. Falcon trading computers as well. My old trading computer is a Falcon, and it was solid. It was good. All right, guys, strong trigger lines. Rule number 1, advantage of momentum. Easiest lesson we're going to get today, guys. When the background is green on your large chart, the market is going up. 10% off for Nexgen users. Nice, Pete. The only way you can have strong trigger lines is if the background is green, the small triggers are green, and the large triggers are green. So it's a little color coding to keep you out of those indecision moments. Strong triggers means that your small triggers are up and above the large triggers. The large triggers need to be wide or widening, opening up. And it's the space that's created between the small and large triggers. Ladies and gentlemen, this is strong triggers. And it has nothing to do with price bars. And it has nothing to do with Fibonacci or areas. It is 100% matching colors and separation between the triggers. It looks like scissors that are open. This is the best of the best look. And when you have strong triggers up or strong triggers down, smalls below the large space between, the odds are favorable for the market to continue in the direction of the trend. That's it. Odds favorable momentum. You guys are going to hear it in the room all day long. Odds favorable momentum. This market is more likely to go up than it is to just go down. And this market is more likely to go down than it is just to go up. So this is the 13-2 chart. This is the big chart, the large chart. The large chart will define rules 1 and 2, momentum. Never even look at a small chart until this guy says go, or this girl, depending on where you're at with it, I suppose. So strong triggers up, strong triggers down. Easiest lesson you're ever going to get, guys. Strong triggers doesn't last forever. Sometimes the smalls return to the large. Sometimes they work their way inside of the large. Guys, this is a loss of momentum. This is weakness. This is where retracements from the middle of nowhere are most likely to happen. This is where Fibonacci areas are most likely to hold. So for the brand new user, there's really two options. Strong triggers down or strong triggers up. And when that momentum goes away, when the smalls work their way inside of the large, this is where reversals are more likely. This is where the advantage of momentum is gone. And guys, 4 out of 5 pivots on this chart pulled from a market reversed with weak triggers. Is everybody good on this? This is really one of the easiest lessons you're going to get. And if I go through all of this stuff and get to a large chart, my small triggers are below the large triggers. There is space between the two. Most current bar has given me this great information. Can you give me a Y if you see that I do in fact have the advantage of momentum here? Chariot says yes. Guys, I'm going to tell you right now, your yeses and nos are going to let me know if I need to expand on the lesson. So don't be afraid to put a no in there. I put a lot of no's in the room when I was a new user. It's just momentum. It's just one piece of the puzzle. Small triggers are below the large triggers. First bar, space between the two. Ladies and gentlemen, you have the advantage of momentum. Pretty cool, right? How easy is that? But momentum is only one of 3, guys. Momentum is 1/3 of the equation. So think of it as a flow chart. If I have momentum, I'm going to make sure that there are no termination conditions present because I want room to my profit targets. When there are no termination conditions, we're going to say that we have a clear path. Now, a clear path doesn't assure that the market's going to run forever, but a clear path means that there's nothing in the way on the large chart to create a bounce, to create a reversal, to create any problems for you. So a termination condition is where the large crowd makes decisions. I love the large crowd, small crowd analogy because as long as you know you're not in charge, it's easier to respect these areas. And they respect these areas because they created these areas historically. So when price, the large crowd, is moving up, we wait for it to reach an area. We let the price bars reach Fibonacci resistance, a divergence high, yellow 1-to-1s. And when price reaches that area, all you have to do is count triggers. How many of my trigger lines have gotten above resistance? And guys, the answer is 0. 1, 2, 3, 4 trigger lines remain below the area. When 4 trigger lines remain below your area, that's a termination condition. So it's an easy phrase. Price reaches the area. How many triggers have gotten through? Until price reaches the area, that red line is a target. Until price reaches that area, that blue line is a target. Price reaching the area begins the process of creating a termination. That's where decisions are made. So count your triggers every time you reach a line. And if 0 triggers go through, you have a termination condition. Rule number 2 is not met. And I want you to assume that that area is going to hold. I want you to believe that area is going to create an untradeable bounce. I want you to accept that you will lose more than you win if you trade into a termination condition. If 2 of your trigger lines get through the area, so price came up, reached the yellow 1-to-1s, 4 trigger lines below, the same way it happened here, absolutely no trades. I'm going to wait for the reaction. I'm going to let the large crowd tell me whether they want to break through, whether they want to bounce, whether they want to fight one another right at that key area. If 2 triggers break through and you have strong triggers, guess what? It has the potential to break, but I'm going to tell you guys right now, through a lot of study, that's not your best look for a breakout. That's iffy at best. It's when 3 trigger lines break through the area of resistance. When both small and one of the large get north of that area, now that potential to break out, now it's really there with that momentum. That's going to be your best look. And guys, this is going to be the second trade on your plan because the path still isn't clear. So we're trading that potential using the momentum. But when 4 triggers get above your area of resistance, that area of resistance begins to behave as support. Now your path is clear. And guys, your path remains clear until you reach the next area. So what you're going to find is that the easiest trades that you'll ever take are going to be when 4 triggers get above resistance and the path is clear. That's your high probability trend trade entry. And we're going to try to ride that up to the next level. And then when I've got momentum and there's nothing in the way, that's your high probability trend trade entry. It's on a large chart. I'll show you how to find it on a small chart in trading to the area, to the target. Does that make sense, everybody? Rules 1 and 2 are rules 1 and 2 for a reason. Because when you have momentum, when there is absolutely nothing in your way, you're going to be chomping at the bit for an entry. You can't wait to take an entry. And here's the deal. Does everybody remember when I said 90% of your day is doing nothing? 90% of your day is sitting on your hands. 90% of your day is trying to find both of those advantages. Smalls below the large. I have momentum. Only 2 of my trigger lines have pulled through that area of support. Give me a Y if you see that it's only the potential to break. Ladies and gentlemen, divergence is a loss of momentum that you're going to see on a small chart before you see it happen on a large chart. Divergence is the biggest killer of the potential to break. Divergence is the biggest reason you guys are going to lose that potential to break trade unless you're following the KISS plan as a brand new user to optimize your chances of success. Because when it's only the potential to break, when it's only 3 out of 4, you're going to rely on momentum to carry you through that area. You're going to say, I refuse to enter that market if I'm losing momentum because I need that momentum to push me through the area. That's in the plan. And they're pushing up. So we'll see. I don't know what they're going to do, but I do know that my advantage is gone. So let's go define an entry. What do you say? How are we going to take advantage of momentum? How are we going to use that clear path? How are we going to take all of these gifts provided by the large crowd and then really just kind of laugh at the small crowd when they fail, guys? So rule number 3 says you're going to use a limit order to buy or sell a pullback in an area inside of triggers. So that limit order means that you're actually going to wait for the market to come to you. You're not going to chase trades. You're going to force them to come to the best of the best spot. And you're going to use that limit order to buy or sell a pullback. That pullback is the little fight created by the small crowd. And then you're going to buy that pullback or sell that pullback at an area, at a fib, at a mid band, at a yellow 1-to-1. Because the same way those areas on a large chart can stop a trend, they can stop that tiny little push from the small crowd and create a bounce in the direction of your trade. The key to everything, and guys, I want you to write this down on a piece of paper if you're struggling with entries. You're going to buy or sell a pullback at an area inside of triggers. And I want you to make inside all capitals, because your trigger lines on your small chart will define where that pullback is most likely to go. Your trigger lines are moving averages, and price returns to moving averages. It's the regression of the mean. I feel so smart when I say that. I have no idea what it means, but someone smarter than me taught me that. That pullback is most likely to go to the large triggers on the small chart. Those are the smooth ones. You'll use those to gauge momentum. But it may also go to the large triggers on the large chart. Two-chart process, guys. So your large triggers from the large chart have been superimposed on your small chart. And when they overlap, when your large and synthetic overlap one another, we call that favorable large triggers, because it is providing you the absolute smallest area for a retracement. Does that make sense, everybody? Price returns to triggers. And when you have a fib or a mid-band or a yellow 1-to-1 inside of that retracement zone, this is your amazing entry, guys. This is your best of the best. That is precisely where the small crowd is most likely to fail. That is where the advantage of rule number 3 is had. That's going to become your entry for the highest probability trend trade ever. So when the rules are met, I say that a lot. When the rules are met, when I have momentum, when my path is clear, I'm going to go to a smaller, faster chart, and I am going to call my shot. And I have to wait for a reversal bar. A reversal bar begins the pullback. A reversal bar gets that small crowd fight going. Guys, if you get nervous and jump in before that reversal bar is an outstanding exit condition, because it's a loss of momentum, and it's the loss of momentum that we need to get us back to our great entry. So the reversal bar begins the pullback. It is not your entry. When it happens, or even before it happens, you can look at your trigger lines, large and synthetic, and you can say, that's where the market's most likely to push down. That's where my retracement is most likely to occur. But you're going to remind yourself that trigger lines are not bouncy. Trigger lines are not entry points. Your entry comes from an area inside, all caps, of that retracement zone. Fibs, mid-bands, yellow 1-to-1s. Sometimes there's one line, sometimes there's 8 lines, guys. So you're going to create a window from the highest point to the lowest point. Because of the large chart advantages, because you have momentum, because the path is clear, you're going to activate your limit order just above the highest area inside of triggers. Entries come from the small chart, chariot. So when the large chart says up, when the large chart has a clear path, you're going to turn your attention to that second chart, that smaller chart, and that's where all of this is going to happen inside of that one bar on the large chart. No, Sword, did I ever say that? Did I ever mention colors? The only time I mentioned colors, that's not true, I did. The only time that I mention colors is in order to have strong triggers, the colors must match between the background and the trigger lines. That's it. That is my only reference to trigger, to color. When I talk about terminations, I love it. I keep it so simple. I don't talk about the color of the area. I talk about whether or not price reached it. I don't talk about whether it's changed from blue to red. I talk about where the triggers are in relationship to it. Guys, I am giving you the lowest common denominator. And Sword Trader, congratulations. It turns out that you're human. Because every one of you in this room at some point have tried to add a rule, to add a thought, to create more to the very simple approach. I've done it 100 times. So the reversal bar starts the pullback. The trigger lines define the retracement zone. The areas within define where it's most likely to bounce. That's it. You're going to activate a limit order. You're going to right click on your chart and you're going to put buy limit 2 above that highest point, closest to the reversal bar. And you're going to hope, pray, and wish that the small crowd ate their Wheaties and they get to you. And if they do, That's your highest probability entry ever, guys. That is the best of the best. And because you know that it is a range, if it pushes through that first area, you're not going to panic. They're still in the retracement zone. They're still above areas that could create a bounce. And if they push just a little bit below that area in the retracement zone, you're not going to panic. You're going to say, man, they're still doing everything my indicator said that they might. But if they get below those trigger lines, beyond those retracement zones, about 5 ticks below, guys, is where your advantage from rule number 3 is no longer in play. So you're going to learn to ignore any line on the wrong side of triggers. Any line below triggers for a long trade is where the market should not go. That language becomes important as you work on management. Everything says down. Triggers are down. They are strong. Path is clear. And guys, you're waiting for that reversal bar. And the reversal bar signals the pullback. You can define where the pullback is most likely to go based on these trigger lines. You can define where it's most likely to bounce based on the areas within the trigger lines. And you know exactly where it shouldn't go on anything beyond the trigger lines. Your limit order goes just below the area closest to the reversal bar. That becomes your entry for the highest probability trend trade. Sometimes you will take the best entry. Everything says down, life is good, you take the perfect entry, and if that trade fails, guess what? You're going to have a protective stop not too terribly far on the other side of those triggers, because by defining where the market is most likely to continue, you have defined where the market should not go. Does that make sense, everybody? By defining the perfect entry, you know exactly where the advantage is gone. And on that KISS plan that I gave you, your initial stops are placed 4 or 5 ticks beyond the triggers where the market shouldn't go. And guys, you can study this look. You can practice this look. If you scroll back on a large chart and you see momentum and you see the potential to break one of these tails, circle it. Potential to break all the momentum, circle it. And let me show you exactly what the circles look like on a smaller, faster chart. And this is where the magic comes in. So if I take a square or a rectangle and I put it around this bar, inside of the one bar with momentum, with the potential to break, guys, you get a reversal bar, you get a pullback, you get a bounce, and you get continuation with the large chart advantages. Give me a Y in the room if that makes sense. Language pays dividends on entries. It's a pullback to an area inside of triggers. Didn't reach the red one, potential to break this red one, all the momentum. It's a reversal bar. It's a pullback. It bounces, doesn't get 5 ticks below. And then Sword Trader, because they knew you needed the lesson. And I love this. Check this out. Inside of the one bar that never gives up momentum, inside of the one bar that never falters on that potential to break, you went from green to red and back to green. And this is why I don't reference color, because this chart paints that background color when the small triggers get below the large. So when that happened, it went red. But you still have areas in the retracement zone. It still didn't get 5 ticks below the retracement zone. So don't get caught up on colors. Does that make sense? That was like the perfect example. I almost feel like you saw that set me up so the rest of the class could get a lesson. Nicely done there. I owe you one. And guys, it's repeatable. It happens on the S&P pretty much every day. It happens on crude oil pretty much every day. But when you get weakness at an area, second guess yourself, that's okay. You're going to do a lot of second guessing until this becomes second nature. It really will. You're gonna panic and you're gonna enter too soon, and you're gonna question and you're gonna enter too late. And eventually you're going to get to that perfect entry through study, through simulation, through class feedback. So guys, weakness at a fib. Does everybody see it? Look what happens with weakness at a fib more often than it does not. And that's how rules are met and how rules are made. Sometimes the market can't figure out what it wants to do. This is such a good example. I want you guys to see this right now. Rules say no. Rules say no, 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 nope, nuh-uh, not gonna happen. Ladies and gentlemen, 90% of your day is waiting. We're professional waiters. Does that make sense, everybody? And from here to here, you're going to be livid that you're not making any money. You're going to be angry that you're not making any money. I'm going to tell you right now, you're going to have the fear of missing out. You're going to see all this up and down, and you're going to wonder, why am I not getting paid? It's because your rules aren't met. But when all the nonsense is over, one of the big crowds is going to take over. And when all of the nonsense is over, one of the big crowds is going to show the potential to break that area. And when all of it's over, you'll be able to enter an area inside of triggers and make that $300 or $400, right? Make that $200 to $300. And all you have to do to put yourself in a six-figure income, ladies and gentlemen, with your day trading, is you need to find a way to make $400 a day consistently every day. Now, if you've spent more than a week with me in this room, you realize that is a drop in the bucket of the potential that this software offers. I'm teaching you how to find the easiest money right now, the best money, the highest probability money. And then from that, you'll find the other opportunities, guys. So, are there any questions about NinjaTrader? Any questions about the idea that when price reaches support and none of the triggers break, you don't have to take that short trade? It's okay to wait? Mark ATM Novak. The market's the ATM. And there's days when it is, and there's days when the banks are closed, guys. And when you have a plan, you don't care which it is. You're just focused on following rules. So that's NinjaTrader, and that was a pretty good run. Now we're going to go to TradingView, guys. And TradingView uses two charts. And TradingView uses trigger lines. And TradingView has divergence and one-to-ones and mid-bands. And TradingView has pretty much everything that NinjaTrader has, with the exception of Fibonacci. It's in the works, but it's not ready yet. It's a lot of programming that goes into it. So you have the option to purchase chart prime zones. This is the best of the best that Nexgen has found collectively through researching all the available options. You don't have to spend for chart prime zones. I don't hesitate to spend for chart prime zones because if this is my business, I want the best tools. If you are like, well, Mark, I'm just not sure yet. I'm not positive this is what I want to do. I'm evaluating the software. I don't want the extra expense. There are free versions. The free versions aren't as good, but there are free versions. There it is right there for you. I don't want you guys to feel like we're forcing you into another purchase. But the zones behave as fibs. They can stop the market. The zones can create untradeable bounces. The zones behave the same way Fibonacci does. But guys, the difference between TradingView and NinjaTrader. TradingView is going to use minute bars. Your large chart is a 15-minute bar, guys. 15 minutes. There is a lot that can happen in a market in 15 minutes. So on your large chart, we're going to use it, and let me give you guys the plans for TradingView as well. The large chart is still going to define the direction that you're trading. And the large chart is still going to be the first place you look for trouble. But we're going to read it just a little bit differently, guys. And on the large chart, the small triggers will determine which direction you're trading. So A lot of you Rinko users are saying, but Mark, the background isn't green or red. But Mark, where are the large triggers? Don't need them. Let's keep it simple. Small triggers will define, for the best of the best, which direction you should be trading. Theoretically, Victor, yes. Theoretically, yes. And then you can make the decision. I've got them for a year. I don't plan on letting go of them. I believe heavily in the advantages of supply and demand. But one of the things you'll find, Victor, is if you open up a Rinko chart next to a minute chart, very often those supply and demand zones correspond at least closely with Fibonacci because they are based on the previous action. Fibs are like crazy accurate. Zones are pretty darn good. So the 15-minute defines the direction. Guys, if the small triggers are down, the easiest trades you will ever take will be to go down with them. If the small triggers are up, the easiest trades you will ever take will be to go up with them. Remember, what I'm doing here is giving you guys the path of least resistance to finding the easiest, highest probability trades you can take. Once you define the direction of the triggers, there are 3 potential spots that the most current price will be. If the most current price, highlighted in your little price bar here, is to the left side of the small triggers, we're going to label this the strong side. This is where we're looking for momentum style trades. This is where 1 minute areas are most likely to break. Not guaranteed, but most likely. This would be the advantage of odds favorable momentum on a big slow chart. If you are in the transition period, if the most current price is hovering inside of those triggers, the transition is where I'm going to heighten my awareness of the 1 minute areas. I'm going to make sure that I'm ready to manage if I reach one. And then if I am on the weak side, the right side, not left, a la derecha, guys, this is where the 1 minute areas are most likely to bounce. This is where trouble in the way is most likely to stop your forward progress. Because the weak side of the triggers, my friend, is where you will be when these triggers roll and change on you. Does that make sense? Strong, this is your best look. Transition, I'm going to perk up a little bit. We'll call it that medium probability thought process. Weak, you're still looking for long trades, but you're hyper aware of what's going on the 1 minute chart. And then the final question is, do I have room to targets? Do I have room to get to that zone? Do I have room to get to that divergence high, to those yellow 1-to-1s? Do I have room to get to that mid-band, to that VWAP? And if the answer is yes, you're going to go to your smaller, faster chart, and you're going to define an entry. There are 2 styles of entry on your 1 minute chart, guys. There is what we call a momentum style entry. And a momentum style entry means that you have strong triggers, smalls above the large or smalls below the large. Separation between the two, the exact same look that you learned on your NinjaTrader charts. This is strong triggers. When the large chart says up, when the large chart is on the strong side, you'll be able to capitalize on these momentum trades by activating a limit order right at an HVA line, right as a zone. As the market breaks, because resistance becomes support, and then pulls back. It's imperative that you wait for the break. If you try to peek your head above that line, that's where disaster hits. But if it breaks and pulls back, the triggers are strong. Ladies and gentlemen, this is the momentum trade. This is going to happen in between those zones, in between those areas. You're going to see it a lot. The second trade entry is probably the most common trade entry. And as soon as those small triggers on the 1 minute chart, your entry chart, turn against you, pinch, point down, your job is to wait for a pullback to an area. Whether it is a zone, whether it is 1-to-1s, whether it is a mid-band, and then not just wait for the pullback, but wait for a close, a finished bar, at least 2 corners, up bar, from that area on the correct side of the triggers. This one piece of the puzzle, ladies and gentlemen, is going to keep you out of 20 pounds of heartache. Because if you fight those small triggers, you're more likely to lose than win. But when you have large chart up, when you pull back to an area and you get in on the good side, that's when the market heads up. And it was pretty cool. I took a picture yesterday, and I want you to see this. I posted it in the other room. Let me see if I can find it here. And it was nothing more than an example of the entry logic. And I believe this was it right here. Even if it's not your trade, give me a Y, TradingView users, if you see that that market continued down. Continued down, continued down, continued down. And it wasn't until a close on the correct side of the small triggers from an area that it absolutely rocketed north with those triggers that were up. Pretty cool, right? So everything that I teach in the room is designed to give you the highest chance of success. Everything that I teach in the room is designed to give you a foundation so that you can find more trades. I'm not telling you these are the only trades you can take. What I'm telling you is that this is a stepping stone in your learning journey, ladies and gentlemen. This is how you learn to read your indicators, how you learn to recognize advantages, how you learn to understand how you need to manage that trade with the location of the triggers. So you will, through study, simulation, class feedback, and practice, you'll write a plan that suits your needs. If you guys want that very, very basic, no large triggers, no colors on the background, no distractions, because maybe you have a little ADD like me, these are your minimals, NASDAQ and ES. I didn't include crude oil because I've done a lot of study on crude oil, and while the patterns are true, I don't think the profits are always the biggest and the best. I prefer ES and NASDAQ, and since it's minute charts, your pattern doesn't know what market you're trading. 15-minute chart, roadmap for key targets, turning points, and termination conditions. Small triggers on this chart define direction. Yeah, gold moves for sure, Wayne. I can build one of those if you need it. The 1-minute chart defines the immediate strength of the market with those trigger lines. Entries are from mid bands and areas. Zones are HVAs. 2 entry looks on the 1-minute chart, guys. Momentum style, and that requires strong triggers. If you don't have strong triggers, you don't have a momentum trade. Or the trend trade look, where it's imperative that you wait for the pullback. And guys, what's cool is when you see this happen, you'll be drawing squares around areas in the distance saying, okay, come get me. That's where my trade has to happen. Closes on the correct side of triggers, not from an area, are not rules met entries. And now there's the checklist for entry, guys. I'm a big fan of checklists. When I was training management in my old job, every manager was given a checklist so that they would know exactly what to do, exactly when to do it, exactly where to do it, and they could create muscle memory that was going to guarantee success. For them in the management, this guarantees that you have an advantage, does not guarantee a win. 15-minute for the trend trade is not trading directly into one-to-ones, divergence highs, lows, or zones. Why? I'm going to show you why, because I take a lot of pictures. So this morning, and this was pretty cool, whether it was your Renko bar charts defining a termination condition or your 15-minute charts defining a termination condition, look at where the market stopped and dropped. And you knew about those before you ever got to them, and you didn't have to trade into them and take a loser. So your checklist says, don't trade into stuff. And your checklist says, don't trade into stuff. And then buy or sell a close on the correct side of the small triggers at the 1-minute mid-band or area. And there's a couple pictures. Your momentum trade, once again, don't trade into stuff. Have I mentioned that? 15 is on the strong side. 1 minute has strong triggers, odds favorable momentum, any pullback to an HVA line or an area for entry. What's it going to look like? The exact same every time. Your entry should look exactly the same every time because you're following a checklist. Your entry for the trend trade, ladies and gentlemen, should look the exact same every time because you're following a checklist. The most successful traders I have ever worked with have one or two trades and do the exact same thing every time. They enter at the best of the best spot because great entries create manageable trades, and they manage out at trouble, and they look for change. They look for the advantages that get them in the market going away so that they can manage their trades effectively. Money's made in management, guys. I teach entries. I teach you to get into the market. I'll work with you on management, but entries are really the focus of what I do because great entries create manageable trades. So in addition to the trading view plan, I'm also going to give you a spreadsheet. Spreadsheet has tons of HVA trades on it. This isn't even on the plan. This is your next trade. I pulled it out of the KISS plan because it fights the small triggers, but there will be a way to take advantage of tops and bottoms. Trend trades, momentum trades. I'm redoing the management a little bit based on the location of the triggers. Termination conditions. And then guys, both spreadsheets have trade tracking sheets. And this is where I really want to see you guys put some work in. Because your trade tracking sheet, you can take a picture, you can drop it in, you can define the trade, you can even record your wins and losses. But there's a spot for feedback from class, for your own notes, right? And sometimes the feedback is perfect entry. Make sure you don't miss it. And sometimes it's work on your stop placement. Here's how. And sometimes it's wait for the close of the triggers. Here's how. Here's how you're going to do it. But that feedback becomes really important. And this is the final thing before the first break, and then we'll get to charts in the live market. Every morning, I'm going to encourage everybody in this room to go back and look at the pictures that you presented in the room. Go back and read the annotations that you put on the chart and compare it to the feedback that you got on the chart. Because this is going to identify the things that you're doing great. This is going to identify the areas where you need a little work. And Paul, I'm not trying to call you out, but if I may, I want to show you how the classroom works. Initially, there was a struggle with the large chart read from some people in the room. And every time they posted in the room, they gained clarity. And then their large chart read wasn't problematic anymore. And Paul, you read it like a boss. And then entries needed just a little bit of work, a little bit of patience, a little bit of timing help. And we worked together. And now entries are freaking amazing. And then it was stop placement, right? And guys, every time you post in the room, you're probably going to get something to work on. It doesn't mean that you're wrong. It doesn't mean that you're a bad human being. It means that I've identified through chart reading a way for you to do it better, a way for you to have more advantages, more money, less risk. And you'll get that feedback every day. So if you're asking yourself every morning what worked and what didn't work, what felt easy, what felt forced, right? You're going to set yourself up for the day, guys. You're going to focus on the good things. I firmly believe everybody is fixable. I also firmly believe that if you're looking at the finish line before you learn how to run the race, you're going to struggle. Keep it simple. Keep it focused, guys. There's a method of learning called chunking. Learn how to identify momentum. Learn how to read your small triggers. Learn how to recognize that clear path, right? Make sure that you're not trading into areas. Learn how to define your entry, and then piece them all together for the best trade ever. But ask for feedback. Feedback's where the magic happens. So guys, that's my first hour. Are there any questions before we take a little break? Sounds cutting in and out. I'll do a little reboot on break too then, Ron. And watch how easy it can be. Small triggers are up. Strong side of the small triggers. Nowhere to go. I don't care about my small chart. Does that make sense? That's your read. This is your 90%, guys. There's nothing to do. I don't have a clear path. So I have two options. Either the area creates a roll and the market continues down, or it all breaks and I look to go up. But as long as I'm in this zone, I'm going to do a whole lot of nothing. NASDAQ. Triggers are down. I'm not looking for long trades yet. I'm on the weak side of the down triggers, so they're threatening to roll. I'm cool not going long yet. Let them roll. Let me get above. Let me have room to targets. All right. I will be back in 5. No momentum, colors don't match. No clear path. Sitting on my hands. Loss of momentum. Nope, I don't think that's where we were. Strong triggers. Only the potential to break. We'll see what that one does. I'll be back in 5, guys. And I'll do a reboot, too, to hopefully fix the sound. And for the first time in the history of the room, John Novak waited for Mark to go away. I want to see what he did though. Let's see what his lessons are. Use the terminations on the 15-minute chart to take advantage the sell from the top in short annotation. So he used the terminations to find a way to go short. Pretty cool, right? Used it. Good morning, Pibbies. And then John, little aggressive, fighting everything, but because of the terminations, going long. So guys, this is pretty cool. And I'm not going to go through all of them, but one of the things that John Novak is showing you is where you're headed. When you start to recognize those termination conditions, when you start to recognize where you're at in relationship to the triggers, when you start to recognize a couple patterns outside of the very basics, man, it's going to be pretty cool, right? But you got to have those basics in play. So I'm going to scroll to the top of the room and we're going to start looking at the charts that you guys presented today. And I'm going to give feedback, and I'm not the trade police. We're just going to do some chart reads. And we're going to see what it is you guys have going on. So looks like Paul got us going this morning. And Paul, you said, and I like it, triggers up, strong side of the triggers, room to trouble, but the only thing was that you were trading right into a brick wall. Trading directly into trouble creates challenges, and that's exactly what it did for you. It created challenges. Waiting for the clear path makes life so much easier. Can you guys hear me? Yep. Okay. Cool. Always tell me if you can't hear me, guys. So Paul, the only thing missing, right? You had the large chart read dead to rights, and the only challenge here, did you go short or is that an exit? You're going short, Paul? No, looks like you went short before you went long. I see a down bar, but then I see an up bar, but then I see a down, and then I see an up. So that was a long. How did the long stop you out on the previous bar? That doesn't make sense. So it looks like you went short at 96 and then out at 95. Am I reading that correctly? This looks like you went short first. Okay. So let's just leave it at the lesson. Don't trade into brick walls, right? It just doesn't work for us. It hasn't worked for me yet, guys. I've been trying to trade into termination conditions for 6 years, and it has not served me well. Now, this is the chart I was pretty excited about showing. I want you guys to see how this works. So the one thing, and just what I told you about John Novak's trades. When you understand the basics, ladies and gentlemen, you're going to start to see more and more opportunities outside of those basics. And Wayne, gold star high five here. And I want you guys, I want to run through this. Large chart read first. So there's two types of tops, two types of bottoms, guys. We have what we call a strong top or a strong bottom. And what that means is that your reversal in the market comes from a termination condition. It comes from an area that stopped the market, whether it was Fibonacci or one-to-ones or a divergence high. And this strong top or that strong bottom, when no triggers get through and reverse the market, guys, this sets you up for the highest probability the other way. This is actually rule number one when you're looking for that potential to break the area below you or above you. And I want you to see what Wayne did. So Wayne had a weak top, and he knows that. It's a weak top. And because it's a weak top, Wayne knows that this trade is less likely to work. So this is a pattern based on that very core lesson where Wayne says, you know what? I don't want to spend my money going short from a weak top. What I'm going to do is I'm going to wait for my indicators to roll. And when they roll, I'm going to go back in the direction of the original trend because that's a pattern that happens more often than it doesn't. So what he did, and this is awesome, he reverse engineered the potential to break trade. Because he had a weak top, he knew that this was less likely to break. And because it was less likely to break, you can even see the divergences printing, which is the biggest killer. He said, I refuse to go short. Let me let all of my triggers agree back up. I'll pull back to that same area that's less likely to break. And just outstanding trade, Wayne. Outstanding chart read. And guys, this is where all of you are headed. But you've got to learn the basics so that you can begin to add in those daily visuals, those patterns that you see start to repeat themselves. Nicely done. All right, Victor. Bitter soup trade. Small triggers up, price on strong side of the triggers, space to the next zone, everything's good on the large chart. Made the picture big on the 1 minute chart to see it better. Triggers changed against trade direction. Price closes barely above triggers. It did not work. And guys, my feedback to Victor was go ahead and spread out your charts, guys. Make sure that you can read them. Because when you spread the chart out, you realize that it never closed above those triggers. And when it never closed above those triggers, the rules weren't meant for a trade. And that's what we call avoidable losses. Pretty cool, right? And avoidable losses kill accounts. They kill accounts. Victor, strong top only with fibs. That looks like a strong no triggers through. Which one are we talking about? Wayne's? Right here? All right, so let's do a quick lesson. And you're going to love this because this is a very common. You're saying, but Mark, none of the triggers got through divergence, right, Victor? So it's a strong top. So let's talk about how divergence is made. When the market goes up, right at that point is when the sellers take over, Victor, and your software begins to run calculations in the background using MACDs, comparing retracement levels and all that good stuff. That pink line doesn't print until right here. So that pink line doesn't exist until the market is already going down. So price didn't reach the pink line. Price created the pink line. Now, when does that pink line become a termination condition? If price comes back and reaches that pink line and the triggers remain below, that's when it becomes a termination. Does that make sense? Awesome. That is the most common mistake on strong tops and bottoms. But because it's a line in the sand where momentum is lost, it becomes this awesome opportunity. So it's a weak top, less likely to work. We've all made that mistake. We have all made that mistake. And I love this because, guys, this posted in the room right after Paul asked about momentum trades. Everything is up. Strong side of the triggers is where he was. He had room to the divergence high. And because of the strong triggers, the market pulls back to the 1-to-1s, enter right at those 1-to-1s, and he takes it right up to trouble on the large chart. And this is the perfect momentum trade. Nicely done, Andy. Momentum trades, the reaction time has to be a little faster, guys. Momentum trades, you got to be just a little bit quicker to catch those. The trend trades are easier in the beginning. but there's a lot of ways to do things, and you will get there. All right, let me figure out where I am. I don't even know what day I'm on. Hold on one second. I'm coming. That was yesterday's video. That was Andy's trade. All right, let's take a look. I'll put this one in there just for grins. Why trading in determination conditions rarely works out. Pretty cool, right? And eventually you'll find a way. Eventually you'll find a way to capitalize going the other direction, the way John Novak was showing you in the room. You'll get to this point to where you'll start to see these terminations, and you'll start looking for that pattern to go the other way. I was talking about it with a guy this morning. Just because it's no longs doesn't mean you're not going to find a way to go short eventually. In the beginning, it's counter trend trade. You don't need it, but you'll get there. I love these. So, does everybody see the momentum? Strong triggers, everything says down. There's room to that blue fib. Cav says, with this look, I can jump in, make a couple $100 to trouble, and jump right back out. Momentum and path, guys. This is what we call the chili dog trade. Thank you, Ron C., for studying the high probability trend trade, recognizing momentum and path, and creating a trade that so many users in this room are finding success with. So guys, if you are capitalizing on the chili dog trade, tell Ron C. thank you. He created it for you. With all the momentum, with room to that fib, Pete says, well, if Cav can do it going down, I can do it going up. And then it's two triggers, and it's divergence, and it's wrong side of everything. And so Cav says this was a risky entry, but it was worth the risk. And let me show you what Cav means, or I'm sorry, Pete means here. Forgive me, Pete. I know who you are, I promise. John Novak used to call this the bar fight, and I love it. And this bar fight may not resonate with all of you. But let me show you what Pete's looking at and why he says it was worth the risk. Pete had a strong bottom. And a strong bottom says, hey, guess what? The trades going the other way are more likely to work. And Pete had odds favorable momentum. And with odds favorable momentum, Pete knows that the market's more likely to go up than down. And Pete had the potential to break with all that momentum from a strong bottom. And he capitalizes on the momentum and path on the first one and exits at trouble. Great job, Pete. And then when it pulls back, and it pulls right back to the lowest area, and you guys can't see it, it is inside of triggers, which means Pete knows precisely where it could bounce. He has the smallest risk ever, and he has all this momentum to push it back up to trouble. And Pete says, because of my advantages, I choose to take this trade with a little bit of risk, and I'll manage assertively because I know it's not my best look. And the way the bar fight scenario comes in, strong bottom, odds favorable, potential to break, tiny risk, room to trouble, divergence on a 50-50, guys. That's the only person you're fighting. This is the captain of the chess club, and this is the drunken rugby team standing behind you. When you speak out in terms of advantages, guys, when you look at your charts and you say, I have so much going for me, your plan will change from the basic. Can't stress that enough. Is Pete's trade your trade right now? Maybe not. You might not be there yet. But one day, with a little bit of study, with a lot of feedback, with some practice, you might start taking the same trades Pete's taking and making money with. You may not. You may not need it. You may stick to the high probability stuff. That's up to you. Cav, from the termination, you say price bars up. They most certainly are. Small triggers rolled. You get above trouble, and you take a momentum trade. So guys, there's a momentum trade that's in the user guide. So, hold on. There's a momentum trade in the user guide that says, if no trigger lines get through a fib, no more shorts. If the small triggers roll up, start looking for momentum to the upside. And if you have it on the small chart, if you break through the area, if you pull back to the area, excuse me one second. Woo, saved your ears from a big sneeze. Cav recognizes this as a trade that Nexgen's been teaching for a long time, and it's based on terminations. It's based on momentum. It's gauged in having room to your next target. And Cav, that is perfect execution on a momentum style trade from a strong bottom, from a termination that none of the triggers broke through. Once again, guys, maybe not your trade yet, but one of the great things about this room is you're going to see where you're headed. You're going to see what's available to you beyond the basics, and everything that these guys show that doesn't fit high probability trend trade rules. We're going to talk about how the lessons from those rules created the ability to find more opportunity in the market. Does that make sense, everybody? All right, I'm going to click on a couple so I can get back to the feedback. And I'm going to click on a few and then I'll scroll down. And I think that's it. So here we go. Victor, here we go. You can feel the enthusiasm, Victor, in your charts. Down move with price on the strong side of the small triggers, space to the next area. Going through, reading the large chart, going through the three things. What direction? Where is price trading? Do I have room? Victor, awesome large chart read. Small chart, price did not close on the right side of the triggers. So Victor, it's important to me that you understand right now in this moment that you got in against the small triggers. Do you see it? Small triggers are up. You don't see it? Okay. That's why we ask. Here's your small triggers. I'm going to draw a line on the top line of those small triggers. So there are two sides to these triggers. There is the side that fights. There is the side that doesn't fight. You might even say you entered on the strong side of triggers that are going up, where you could have entered on the weak side, and that's where your highest chance of success comes in. Does that make sense, Victor? So when those triggers turn up, if you're left of those triggers, that's not your entry yet. The entry comes from the close on the correct side. And let me show you why. Because Urenco bar users are used to selling a pullback to an area, right? That was an area, and that was an area, and that was an area. These small triggers going up say, be calm, wait, patience, don't fight them. And then when it closes below it, that's when the market starts down. Does that make sense, Victor? So large chart read is perfect, 100%. Pretty crazy, right? When did this market reverse? When it got to the weak side of those small triggers up. When did this market go down, or this chart go down? When it got to the weak side of the small triggers up. Pretty cool, right? So the large chart read is spot on, Victor, 100% without hesitation. Little bit of timing on the entry. Because what if they decided to go to the mid band? You would have been run over, right? They could have come all the way back up to 580. 10 ticks above. So that's one of the reasons, or one of the ways that entry rule for the trend trade look is going to keep you guys from getting absolutely steamrolled more often than not. Great chart read though. Miss Jen, how to blow out an account. Victor, you do you. You get as high as you want if you can still trade. So we're going to do the whole read here. I know you are. It's probably not legal in Atlanta. So Jen says how to blow out an account. I'm going to see if I can read Jen's mind. Jen says that the small triggers are down, only looking for short trades. She says I'm in the transition. Is it going to freak anyone out if I stop writing transition and just put trans? I hope not. And she says there is no room. That's her large chart read. Jen, did I miss anything? And because there's no room, she's not looking for a trade. And look at what the market did right inside of that zone. Look at what the market did right inside of that zone. And Jen said you could keep taking short trades all day long and blow out your account. You could blow out an account in a matter of minutes. So simplicity pays dividends. Great chart read, Jen. Incomplete thoughts, but great chart read. Same picture, how to blow out an account. She was so adamant about that she wanted you guys to see it twice. All right, we're almost catching up on all of the pictures, and then we'll get to the live charts, promise. All right, so Miss Jen, she couldn't annotate. She's having snagit problems. So I'm not gonna imitate your voice, even though I'm sure I could do it perfectly with my hillbilly accent. No, I got you. Guys, one of the things that's gonna happen is when we work together for more than a week, I'm gonna start to know how you think. I'm gonna start to know what you're doing. I'm gonna know when you see the perfect trade, when you see momentum through strong triggers, when you see the potential to break, because 2 out of 4 triggers are above with momentum. Boaz, this is a 21 EMA. Is that the one you're talking about? Which white lines are you talking about? White bars. Oh, on the market flow charts? Okay, I'll get to that lesson. I got you, don't worry. So guys, give me a Y if you see it. Strong triggers, advantage of momentum, clearly in play. And this is where the trade came from, just so you know. Potential to break, but not a clear path, but potential to break. This is one of my favorite things to do. And if you guys start talking to yourself in terms of advantages, watch how this works out. So if a trade is momentum, a clear path in an entry area, we know that she's working with awesome momentum. And then watch this. I'm going to cover clear path. Guys, you could print one of these out, put it on your desktop. Miss Kathy does this on every chart she presents. It's only potential. May need to manage. Does that make sense, everybody? She has momentum, but it's only the potential to break. So watch what she does. She says, because this isn't perfect, we'll make it pink and pretty. Because this isn't perfect, I'm not going to sacrifice momentum. Because my path isn't perfect, I'm going to insist on the perfect entry area. So absolutely no divergence, because she doesn't want to risk momentum. Strong triggers, smalls outside of the large, because she doesn't want to risk momentum. Pull back to an area inside of triggers, because she doesn't want to sacrifice her entry area. And then Jen says, because it's only 2 triggers, and Jen, correct me if I'm wrong, not only will I make sure everything is perfect, I'm going to force the market to give me confirmation that it does in fact want to go up with momentum and the potential to break. I'll enter if I get a reversal bar from the area most likely to create the bounce. Does that make sense, everybody? Well, Jen, there's two ways on the NASDAQ. Can we pretend that you waited for a confirmation bar here? Just for the lesson. And then I'll give you the NASDAQ lesson, guys. NASDAQ is a different animal. Can't stress this enough. NASDAQ is not crude oil. NASDAQ is not S&P. NASDAQ is not even gold, RTY, or Dow. Your large chart on the NASDAQ, ladies and gentlemen, is a 34, not a 13. Your large chart on the NASDAQ is a 13, the exact same large chart size for crude oil in the S&P. So these moves are big. These bars are bigger. There's a lot of volatility in the NASDAQ. So guys, when you're looking for trend trades on the NASDAQ, there's two ways to enter the market on the trend trade. And it all, you too, Pibbies, thank you. It all revolves around trigger location, small trigger location. So Jen, if you get back to the areas inside of triggers and your small triggers are still above the reversal bar marker, that's when I buy at the area. And I'll gauge the reaction when they get to those small triggers. On this bigger chart, it's very much regression of the mean. And then the other entry, and it's on the spreadsheet, the other entry, might as well just show this one, right? Is when those small triggers are less than a full bar away, because it's a 13 too, because these are strong, guys. Nobody in my classroom would ever look at this large chart and say, I can't wait to go short against those triggers. So if they're against you, that's when the close on the correct side comes into play. It keeps you from fighting that immediate momentum. It's the same idea on the TradingView 1 minute chart. You don't want to fight that immediate momentum on a chart that's big enough. But if they're a full bar away, rock star, get in at the entry. Does that make sense, everybody? Two types of entries for NASDAQ trend trades. NASDAQ trend trades. Not crude oil, not S&P. This is a NASDAQ specific entry thought process. Jen, does that clear it up a little bit? So on your chart, they were a full bar away. Could have totally done that at the area. Only took 6 months. Good stuff. All right, Boaz. Tell you what, Boaz, you're next, and I'm going to incorporate the white bar lesson in as well. Smalls have returned to the large. I don't have the best momentum that I need. Rule number 1, not met. I do have a clear path. Every trigger line is above trouble. Give me a Y, please and thank you, if you see that your areas on the small chart are not inside of the trigger lines. They are not inside of the retracement area. They are not in the big or the synthetic. Which means that once I get below those trigger lines, my advantage is gone. And the market did happen to bounce. Take care, Greg. Do you need a review before you head out? I saw that you posted. You want me to grab yours before you split? Guys, 2 out of 3 of your rules aren't met for this particular trade. It's okay to sit it out. I'd love to, man. Guys, don't ever walk out of this room without the review. If you have to go, let me know. I'll stop everything I'm doing to make sure that you get it. Greg, let me find it, though. Let me find it. There it is. Cool. All right. Small triggers up. Large triggers are wide. Space between the two. Momentum all day long. It's only the potential to break. And divergence prints, right? And you say to yourself, when divergence prints, it's not the best trade. I'm not just going to get in at the area. You say, I'm going to wait for a little confirmation in order to take that trade. Greg, this is awesome. Strong bottom, potential to break, not just jumping in, forcing the market to do what you need it to do to take that entry because it's not high probability. Perfect execution, Greg. Nicely done. Exercising your right to not jump in to a lower probability trade with so much risk, but rather giving yourself something to put a stop behind. I love everything about it. Nicely done. Is it 3 picks? Oh, I'm sorry. I missed that sometimes. All right, so there's the second one. Your confirmation is a reversal bar from the area on market flow. And that gives you the ability to put your stop below the reversal bar that confirms the move. Doesn't give you any indication of a slowdown, so you take profits and it just keeps going. So Greg, you want a cool little trick how to hold this one a little bit longer to get a little more money out of that bad boy on your third contract, on your second contract? You guys remember the idea that the market doesn't really change direction until it closes on the other side of those small triggers? That the market really doesn't push up until it closes on the other side of those small triggers? That the market doesn't start its move down until it closes on the other side of those small triggers? Greg, on your runner, brother, you could keep your stop, your trailing stop, right on that reversal bar marker. And you could say, hey, I'm going to hold that trade until they give me a reversal bar. And that particular trade produced a reversal bar at 64.8975. Do you see it? How cool is that? To get more out of your trades using that concept that the market won't start pushing down until you get a reversal bar. When I learned that lesson, I used it to catch bigger moves in the NASDAQ. So when you start incorporating those runners, that's a great way. And you will give a little bit back, right? And it doesn't mean don't get paid at trouble. But what it means is that if you're a runner, you take 2 off at trouble and you're going to let that last one go as long as it wants to go, you're there. Sounds good, Robert. Have a good one, man. Don't work too hard, except at studying this stuff so you don't have to go to business meetings next year. Good stuff, Greg. Great trade. Awesome job on confirmation. And every now and then, we can find a way to make a little bit more. Thanks for being here, bud. All right, Boaz, 2 lessons. We're going to talk about what the white bar means, and we're also going to talk about your trade. So guys, this is a strong trending market. And the idea of a strong trending market means that this is a market that has gone 30 bars in the same direction on your large chart. No reversal bars, breaking through Fibonacci areas. So your first trade is strong trending, triggers above, and you try to take a momentum trade on the first one, Boaz. That idea that hopefully I can just jump in and it goes. But the one thing that you're missing is momentum. You don't have strong trigger lines. I'm going to tell you guys, it's hard to take a momentum trade with momentum absent. Same way it's hard to make a chocolate cake without chocolate. And when people try to make bacon without pigs, it just doesn't work out as well, right? But what it does do is it pulls directly back to the area with every trigger above in a strong trending market. So you say, that wasn't my entry. This is my entry. And that's awesome. And you take some quick little profits. I'm not sure why. Maybe you got nervous. And then Boaz, the same concept. Until it closes below those small triggers, that market's going up, my friend. So that little head fake doesn't have to take you out of the trade. Does that make sense? Same lesson. As long as you are not closing below these small triggers, that market is not going down. That was the first indication that they wanted to go down all the way up here. So maybe a way to catch a little more money. Maybe a way to turn that $200 trade into a $500 or $600 trade. Now the next trade is strong trending market. And that was a fib print that didn't show up at your entry yet. So you also had a clear path, right? Not taking the momentum jump in because you don't have momentum. And Boaz, and I love this. Guys, let me show you what chart reads do for you in the grand scheme of things. If price pulls back to support and every trigger line is above support, what is support? It's a termination condition, right? Even on that little pullback, it still qualifies as a termination condition. That very basic language. Price reaches, where are my triggers? So Boaz says, and I'm just going to assume that I can read your mind, that blue fib is more likely to stop down progress than it is to break. Is that fair, Boaz? Does that sound about right? Because every trigger is above support, support's more likely to hold the market. The market's more likely to go up. Boaz says in a strong trending market, a market that has already proven the only thing they want to do is go up, with a clear path, I'm going to buy that fib. I'm going to buy that fib that's most likely to hold. And absolutely beautiful. What a great way to capitalize on a strong trending market. Great trade, Boaz. 2 times, great trade. Using the very core concepts to find ways to do it better, right? And then great management lesson. Boaz is clearly an expert trader, clearly an amazing human being doing great things with the software, but we found a way. And from 25, we'll call it 82, to 23.95 is another $260 worth of profit on that final contract if you just wait for the reversal bar. Good stuff. All right, white bars on market flow. And I'm gonna address this in 2 ways, Boaz. The first thing, you don't need them. You don't need to know why, but I'm gonna give the whys because I like the whys. So this bar right here, this white bar right here, is what we call a breakout bar. It's all up, closes up, all buyers. So when you see that, what you're saying to yourself is, man, from that fib, they are breaking out. And it is all buyers in control. Does that make sense? Can't hear? Can you guys hear me? Yes. So guys, and yeah, thank you so much for all the yeses. If you ever can't hear, oh, you can hear. You're saying not on this chart, but on the new software? Guess what, Boaz? Exact same lesson, my friend. Exact same lesson. This is market flow. That's okay, Caleb. If you need it, you just have to build it. You don't need it. But you can build it. And if you download the workspaces, it should already be pre-built. But we can focus on that in a little bit. So whether it is TradingView, ladies and gentlemen, this white bar, Boaz, is a breakout bar. That's a breakout bar down. That's a breakout bar up. That's a breakout bar down. So on its own, Boaz, it's just a bar. It's just a bar that says, hey, look, we're breaking out. Now inside of that bar, you'll see it as the black lines, and you'll see it on every bar. Black lines, horizontal lines. But on a breakout bar, what that is the highest concentration of buyers. Still doesn't mean anything. It's still just a breakout bar. You can see where all the buyers are. But Boaz, when the next bar is an up bar that closes above it, that is confirmation of the breakout. Confirmation of the breakout. And when you get that confirmation, it creates that green high volume area line. And if the rules are met, if the sellers come back like they did here and they test that high volume area, that is the spot where the buyers are most likely to absolutely unload and push the market up. Does that make sense? So if the rules are met, that green line represents the point where the buyers are most likely to unload and send the market up. And let's see if we had one from the bottom, down off that termination condition. Breakout bar up, confirmed with an up bar, green line prints. The sellers don't quite get there, but that little retest right in that area, that's where that giant move up started. So the white bars are nothing but breakout bars. And if you don't have rules met, Exhibit A, they mean jack squat. But on TradingView, when you have smalls above the large, let's see if we can find an example. When you have strong triggers, when the market pulls back to that HVA, that is the source of your momentum trade. You'll activate a limit order just above that green line and you'll try to buy that momentum and rock it north with all of those buyers. So that's your momentum style trade that's in the TV plan, and it uses the white bars. It relies on the white bars to create a high volume area. It relies on it to create those areas, but there is a set of rules to be able to take advantage of it. Does that make sense? So do I need to know what it is and how it works? Not really. But the cool thing is I know that green area is the highest concentration of buyers. And if all of my charts say up and they push back to it, that's a great spot for it to bounce up. Awesome trading, awesome question. One of the sad realities of my world is that, guys, I'm not a technical guy. I'm not a left brain thinker. And it doesn't do me a lot of good to know how all of these indicators are created. But I'm really good with patterns. I'm very right brained, and I'm very good at the recognition of patterns. And I'm pretty good at teaching them. Ollie says, check it out. It's not the best momentum ever, but I do have a clear path. We're coming from that termination with no triggers through. Life is perfect on Ollie's chart, with the exception of it's not the whole separation, but he does have an area, and it is on the wrong side of the triggers, Ollie. So if we were keeping it pretty basic, and let me know if this makes sense to you guys, and I'm approaching this as for the new users. So you identified that you don't have your best look for momentum, right? And that slowing is, well, they are outside of the large here. But you do have a clear path. I love a clear path. But if we go back to the very basic language, Ollie, I don't have an area inside of triggers. So you're literally working with 33% of the things that you typically look for to create the perfect trade. Does that make sense? You can always go back to that very basic. Is that the same chart? No. Okay. We'll come back to this one. We'll go in order. And what market was that? That was the ES. Just out of curiosity. Look at how far they pulled down, Ollie. That simple understanding keeps you out of a loser, doesn't it? Did you take the second shot? Good job. So no momentum, losing momentum, no areas inside of triggers. You're already where the market shouldn't go. So if you're a newer user, Do you see how adherence to the plan just kept you out of that loser? You didn't lose $200-300 that you're going to have to make up with the right trade later. Very much the results that you find as a day trader are going to be reflected in your ability to follow the rules, to sit on your hands, to do absolutely nothing. What happened after inventories were announced? Smalls jumped above large, all of the momentum, room to trouble, and there's Pete again, riding that momentum up to trouble. Pete, great job. And just for grins, it's coming from a strong bottom too, just to add a little something to it. Ladies and gentlemen, do you see it? All of the momentum, Pete waits to get above trouble, and he rides that wave of momentum to trouble. Nicely done, Pete. Pete, I gotta tell you, it's almost like you have found a new level of just zen, of calm. Maybe I'm just reading into it, I don't know. All right, was there a trend trade that I missed here? Well, let's go through the rules, Victor. Guys, the rules will answer. Was there a momentum trade? Not trend? All right, so let's go to the rules for momentum. Smalls up on the 15, and it has to be the strong side of the smalls, and then it has to be room to target. So that's the rules. If you pull the checklist, that's what I have to see on the 15 to go look for a momentum trade. Now, over here, what do I need? I need strong triggers, right? I need a pullback to a zone or an HVA with strong triggers. So, Victor, what's the one thing missing when price rockets above these areas? What's the one thing you just didn't get? You didn't get a pullback, did you? And guess what, my friend? You did not miss momentum trades. You never had your rules met. And here's the kick in the pants about trading, guys. Sometimes the market's going to do that without you. Sometimes the market is just going to go and they don't care about you. They don't care about your position, your rent. They don't care if your mortgage is due or if the boat needs gas, right? And there will be times, Victor, when this chart is perfect and you just can't seem to get your entry. But the read is solid. And you're absolutely right. That is exactly where a momentum trade would have happened, right up until you hit trouble. Great picture, man. Great job. There's some of you that are starting to build one of those chili dog trades. I'm formulating a plan, but it's not ready yet, so I'm not going to give it to you. All right, Paul. Smalls up. Strong side of the smalls. You enter at 92, which means you're above everything, Paul. Perfect. Room to targets on the large chart. Perfect chart read. Small triggers are still above the large triggers. And you enter on the pullback to the zone. Victor, there's your momentum trade. And because of the momentum, Paul, you take it all the way up to trouble and you don't lose your head over the fluctuations that get you there. And from your entry, Paul, you had room to trouble. Put a hand up, Paul. Virtual high five. Nicely done. Every challenge that you have presented me in this room, you have overcome with this read, with this execution, with that exit. Nicely done, Paul. I'm having like a proud papa moment, even though you're older than me. All right, Ollie. Odds favorable. Was it a clear path? Or was it 3 triggers through potential? And only you know in the moment, but it looks like it may have been that 3 trigger potential. I would have had to have been watching the market. You saw 4. Cool. You took the pullback to the area inside of triggers. You even got a reversal bar. You closed behind it. You got stopped out. So Ollie, if 4 triggers were through at the time of entry, you took the absolute perfect trend trade. Now there's something that I notice on your chart. You've got a fib right here at 95, but that fib isn't showing up on your small chart or on your large chart. And typically your small chart or your large chart, my goodness, I promise I can talk. Typically you're going to see the fibs from the 5-1, from the 21, and the 13. So because I see this, and let me see, maybe my chart did the same thing. Maybe I've got a tick data issue. Let's go to crude oil real quick. Yeah, see, I had that fib right there. And I also had one that printed behind it. Ollie, how many days back or actually, let's do this. What time zone are you in on your chart? Are you in Eastern time zone? You are. How many days back are you on your chart, Ollie? Are you 10 days back when you go to data series? I want to see if I can figure out what the discrepancy. Oh, so that's why right there. So Ollie, you gave it a whole nother 5 days worth of calculations to create your fibs. 10 days, like it comes the way John Novak sets it up, would have kept you out of that loser. So guys, you can do it however many days you want. 15 is a lot of tick data. Most people don't do it because it just stresses their computer out. On your chart, Ollie, it was the perfect trade that failed. On my chart, it was directly into a termination condition. No reason to take a shot. So I can't go off of my chart. I have to go off of your chart. And your chart was 100% fit the pattern. And if you adjust your workspace, guys, you got to trade your charts. There's a reason John Novak built it at 10 days. And the way it comes from the factory, right? Factory settings. I trust John Novak. I try not to change my indicators. I try not to change my time frames. You don't have to, Ollie. You're totally cool. You took the perfect trade that didn't work, according to your charts. I use 10 days on everything, Jerry. I'm 10 days back on everything. You're still missing a fib after changing it to 10 days. Will you show me a picture? And after you change it to 10 days, Ollie, right click and reload all of your historical data. Let it do a little refresh with that 10 day and see if that changes anything. All right, Miss Jim. Strong triggers, correct side of the triggers. The market pulls back to the zone, pulls back right to the midband, closes on the correct side of the triggers. Because you're on the strong side of the triggers, you're still paying attention to the area. And I think this is a great sit on your hands moment. Without room to get to the things that could create the bounce, you have to suffer all of that nonsense. So Jen made the decision. I love this. Jen made the decision. You see it now, Ollie? Awesome. Jen made the decision to not enter the market because she didn't feel like she had room to trouble. And Jen, it kept you out of a lot of heartache and woe. What's the other part of that? It had already reached a termination condition, right? And your triggers had all rolled down, and it pulled right back to an HVA. And some people, Jen, will take that high volume area and go short because of the termination condition. John Novak was probably short somewhere up here at the term, riding it down to the pullback to 84, right at trouble. Great stuff, Jen. Nice picture. All right, let's read a large chart. What do you say? So, okay, here's a pattern, ladies and gentlemen. Let's see if we can call it. When price accelerates away from those large triggers, hits an area, hits a fib, hits a midband, and the large triggers remain a full bar away, price is more likely to close that gap to the large triggers, guys. This is what we call the gap theory. And the gap theory is a large chart phenomenon, and the gap theory doesn't say go long when you reach the area. What it does say is that any shorts are very possibly going to be short-lived because price tends to close the gap to the large triggers. So we'll see if it happens. And how do I know about this pattern? Because when price hit the fibs and the large triggers didn't follow, it closed the gap to the large triggers. And when price accelerated and hit it, it closed the gap to the large triggers. And when price smacked into that termination condition, it closed the gap to the large triggers. Do you guys see this? How often it happens? There it is again. This is the gap theory. This is one of the patterns that you're going to start to recognize outside of the high probability trend trade. And you're going to be able to recognize it because you understand termination conditions. And you're going to be able to recognize it because you believe that price typically pulls back to large triggers. All those lessons from the first trade open the doors to see more. So before I take a break, I really want to open the floor for you guys that are new. BYU. Who else is relatively new in here? I'm just going through the list, and if I miss you, I apologize. You guys that are trying to dial it in, you guys that are working towards that very basic, ask a million questions, guys. I can't stress this enough. It is terrifying to ask questions. I know that it is. I've been there. I've done it. Wayne, you'll never outgrow new, no matter how hard you try. I want to share something that I wrote, and I wrote this in response to an angry email. And this was my reply, guys. And I think that this sums up what we do. And I think that if you take this to heart as a brand new user, it's going to take a lot of the stress out of it for you. The key to everything that I teach in this room, no matter what platform you're on, is having a foundation. It's understanding some basic concepts and then compounding a little bit each day. There's the Japanese philosophy of Kaizen that says that you're on this quest to be 1% better every day, and that's what creates forward progress, sustained. So for all of my new users, I blanket you with very conservative rules. I give you this absolute pain in your butt, keeping you patient, doesn't let you do anything set of rules, see if I can find it, that says that as a brand new user, you need to wait for a momentum clear path and entry. And you don't have to listen to me. I don't give trading advice. But we talk about this conservative rules, the recognition of advantages. And I hand you that solid plan for both platforms that optimizes your chances of success as a brand new user so that you can learn to read your indicators. So for you new users, all termination conditions are bad. And I want you to believe that as a brand new user. And areas beyond the triggers for entry are bad. We just saw a beautiful example of how once you get past them, you don't know if the market's going to stop. And how no momentum. I want you to feel like when the momentum is gone, your advantage is gone, and you don't want to be in the trade, guys. And all of these blanket rules increase your likelihood of success. All of these blanket rules keep you focused on the great things in the market, keep you focused on the advantages, so ultimately you can turn those advantages into something else. These things aren't always bad. You've seen it. in the room. You see people posting trades where they just jump in, where they get in on the wrong side of the triggers, where maybe they don't have the best momentum, but they have the experience to know when to use exceptions. They have the experience and the time and the feedback to rewrite their plan to find more opportunities. So the more time you spend with me in this room, the more time you spend with the software, the more you focus on the process that yields results, guys, you're going to begin to see more, and this opens doors for you. But if you try to get to all the trades before you can find the best trades, learn the process that yields results. Learn how to keep it simple. Learn how to keep it basic. Learn how to focus on one trade that you can prove wins more than it loses. And learn how to consistently get paid in the market. And once you do that, it's amazing. The KISS plan keeps you focused on the best. And if you keep it that basic, if you follow simple rules, if you look for not all of the trades, but rather the best trades, you can find an extraordinary level of success, guys. And I've watched it repeatedly over the years. The further you guys deviate from simple, and just for my new users, older users, if you'll do me this honor, who tried to make it harder than it needed to be in the beginning? Who tried to catch every trade that they saw posted in the room? Who tried to fight triggers? Who tried to get in the wrong spots because they couldn't stand the idea that the market was moving without them? And then, Wayne, what happened when you stopped chasing the money and started chasing the process? I see your charts all the time. You're a freaking rock star. Guys, get comfortable with the good stuff. Question everything. This is important because your questions foster growth, guys. And the more you ask questions, the more you're going to grow. The more mistakes you make, the more you're going to grow. The more you do on simulator that's wrong, the easier it becomes live. To do it right. Give yourself a little grace. This is my wife's favorite word, and I've really embraced it. You're new and it's okay to be. Keep it simple. So that was an email response to somebody that was mad as hell. That Ollie would fight a divergence. And Ollie, that was still a great trade on your charts, right? And they were so angry that Paul would ever consider taking a trade into that line. And they were absolutely livid that Pete didn't wait for a pullback to an area inside of triggers. And they're like, these guys aren't doing what you tell them to do. And I had to remind them, I don't tell you guys what to do. I teach you the best way to do it so that you can find more opportunities. There's my little pulpit for the day. Wayne says, check it out, Mark. Everything is strong. There's nothing in the way. It pulled right back to support in the retracement zone, and I got paid $2,100 so far today. Is anybody good at math? Let me pull up a calculator. Just for grins, $2,100 a day over the 252 trading days in a year is $500,000. Is $500,000. And Wayne, you're a math guy like I am. Is there anyone in the room that if you caught a quarter of it this year, would you be mad about your year? Would anybody be pissed off at six figures at $500 a day? I hope not. Wayne had to learn, and Wayne, I'm just using you for the example. Wayne had to learn how to make $300 a day. Still a pretty good living. And once that was easy, he found the rest of the money. Does that make sense, everybody? BYU, Justin, Lost, NPC, George, Sammy, Andy, Caleb, Chariot, Cindy, Claire, GWC, Delta, Rick and Roll, Hamid, Dennis, Shadow Pix, Pablo, Z Robot, TB. Stop chasing the money, guys. Focus on the process, because the process works. And once you learn how to make it a little bit, you learn how to make it a lot of it. It's true. It's true. you will get to a point to where you don't care if your trade wins or loses because you know you have an edge. And that is the most liberating feeling ever. That was 6 trades, 1 loss. So Wayne, you lost? Well, I guess that means that the software doesn't work if you took a loser, right? Guys, you're going to take losers all day long. You can make money on 50% winners as long as you're managing your trades effectively, and great entries create manageable trades. It was a bad loser, your fault. Wayne, I don't think anybody in this room, if they're honest, oh, look at that, guys. It closed the gap to the large triggers. Isn't that neat? How did I know that was going to happen? You guys want to know the true story on how I knew that was going to happen, or knew that it was more likely to happen? Because when I was participating in this room, guys, I was short right here because everything was red and it pulled back to a mid band inside of triggers. True story. And right about the time I was getting run over and hating John Novak would say in the room, all right, gap theory's in play, guys. We're more likely to close the gap to those triggers. If you're in a short trade, that's a big stop. And I had to make that mistake about 100 times before I stopped making that mistake. And I had to make the mistake of trading into termination conditions about 1,000 times before I stopped making that mistake. And I had to make the mistake of going short because my triggers were red instead of going short because I had momentum and a clear path. And I believed that momentum would break that area. And I believed that because I lost my last trade or didn't catch this one, this area was obligated to break. And guys, you're going to go through all of these mistakes. You're going to make them all, every one of them. I want you to embrace losers. And Wayne just said it was a bad loser, my fault. Buddy of mine sent me a message yesterday. Said, I screwed up that loser, but I know why it lost. And I'm probably not going to make that loser tomorrow. So guys, welcome to Nexgen if you're brand new. Everything we do works because you're seeing it work in the room, right? You'll find your way, and until you can, keep it simple. KISS plan, there's something to it. Jen, they still haven't gone up, have they? Still haven't gone up from where Jen said, I'm not going to try a long trade. Good stuff. Do I sound preachy? Sorry if I sound preachy. I don't mean to. I've made every mistake you guys will ever make. I've broken every rule. I've traded in every termination condition. I've fought every strong trigger. I've entered at the wrong spot. I've entered at the right spot and not managed it. Guys, there's nothing you can do that we can't fix if you just muster up the courage to post in the room and let me see what you did. True story. All right, I'm going to take a walk. I'm going to stretch my legs. I'm going to relax for a minute. When I come back, it's the last 30 or 40 minutes, guys. It's on you. Large chart says up. Weak side of the triggers. Nowhere to go from the weak side of the triggers. No reason to look for a long trade unless you hate money. Crude oil says triggers down. Strong side. They're starting to break below the areas. You guys want to see a cool trick? Does everybody see that the bottom of the zone at 64? Take your trend line and say, if I take an entry, my entry must be below that green line. Because I don't want to trade into the bottom of a zone. But I've got strong triggers, small triggers, strong side, room to the VWAP. So Victor, 2 options for a trade, right? Break the area and pull back with strong triggers. Hasn't really broken yet. And there's only 56 to 63. There's only 8 ticks of room if it does pull back with strong triggers, right? You have to be aware of that. Hopefully, this bar will be our breakout bar. You guys want to do it together in here? Let me get on my paper trading real quick. This bar has 22 seconds. Just sitting on your hands. Large chart isn't met. I'm looking for shorts. I don't have trouble until that VWAP all the way down here. I've broken my area. But what I need, the only area that's been broken so far, guys, is that one, which means I would need a pullback to this area with strong triggers to have the rules met for a momentum trade. Does that make sense to everybody? I'm calling my shot. Smalls are down, strong side, clear path, area broken, strong triggers. If I get a pullback, that's my momentum trade, guys. And when you know your rules, you will call your shots as well. You'll wait for the market. You'll say, man, I sure hope they pull back because that's the pattern that produces more good things than bad things. So what happens, guys, if they hit this VWAP? What happens if they hit the large chart termination condition? I got to shut that mofo down. I got to say, dang it, now I don't have room. Sounds good, Victor. Have a good one. So Thursday, that's what we're going to do, guys. We're going to watch the NASDAQ all day long. And we're going to say, it says up. There's room to troubles. But from the weak side, how many guesses can you take for that area to break? And we won't take the trade because there's no room to targets. And you're going to say, how's Mark ever going to make money if he doesn't take trades? Well, he's going to make money by being patient. That's one of my Nexgen Pro Trader funding. Up $1,000, right? Up 1,700. Patience. Patience, 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 guys. Patience. That's what pays dividends. All right, I'll be back in 5 minutes. Do you guys want to watch TradingView or do you want to watch Rinko? Let's watch Rinko because check it out. Strong triggers, potential to break. Wayne, it pisses me off. Here we go, last bit. So what do we see? Help me. They bounce theory on the trend. Sure, Claire. We'll come back and see if divergence killed that one. The bounce theory. Are you making up terms? That's okay. So check it out. We're gonna do this right here. I'm gonna blow this up. And maybe this is the bounce theory. And I'm gonna do this two ways real quick. Let me pull this picture up as well. I love these lessons. So Claire, thank you for asking. So many people don't want to ask. I don't get that. You guys pay good money for this software. Make me answer all your questions. So Claire, on the new, have you downloaded the new TradingView plan? I worked on it this weekend and super simplified it, like even more. Okay, cool. So the read every time, and we're going to use the idea of where we are in relationship to the small triggers to determine the likelihood of a bounce in the one minute areas. So when we look at this chart, there are three sides, guys. There is, what an ugly color. There is the strong side. That's going to be number one there. There is the transition, which says, hey, we're going from strong towards weak. And then there's the weak. So there's three potential locations, and you're using the most current price. Not the bars, because the bars are 15 minutes, guys. We're using the most current price. Are you with me so far, Miss Claire? So when I'm on the strong side of the triggers, guys, this is odds favorable momentum. This is the best of the best. This is the highest level of giddy up that you could ever really have. Is that so one is when those 1 minute areas are more likely to break. They're still there. You still want to pay attention to them, but that's when they have the best chance of breaking. When I'm in the transition side, so when you see the transition side, Ollie, thank you for the picture. It's not weak, but it's not strong, right? So if you're a Renko user, you may recognize small triggers beginning to return to the large. So it's the same idea. When I'm in the transition, I'm losing some push-up. It's not the best push-up. This is where I'm going to be aware of those 1 minute areas, and I'm going to be very prepared to manage. And then when I'm on the weak side, Claire, the weak side, and everyone else, this doesn't have to be Claire's lesson, the weak side is where you find yourself before the triggers change direction on you. And it takes a minute, but over here, this is where the advantage of momentum is really kind of going away. You're still looking for long trades, right? We're still looking to trade with the trend. We still want to have room to areas, but from the weak side, Claire, that's where these areas are most likely to absolutely ruin your good time. So watch this. If we go to the live, and thank you, Paul. Paul taught me to do this, and I thought it was pretty awesome. There's my strong side. Boom, boom, boom. Move that over. I'll move that over 1 bar just because. There's my transition. And there's my weak. So 3 squares. From the strong side, holy smokes. Boom, bang, bing, pow. Right up to trouble. Transition, they're trying. They wanna, but they can't seem to. And when it's weak, Claire, look what's happening. I love that. Paul, I'm going to send you a nickel one day for that lesson. So by understanding where you are in relationship to those triggers on TradingView, guys, you can create some expectations for small chart reactions if you choose to enter that trade. Claire, does that help a little bit? Bounce theory. I like bounce theory. It sounds like fun. But all it is it's the relationship to the large, or to the small, excuse me. And it just helps you create expectations. So the idea that every time you look at your large chart, guys, if you go through that process, where am I? That's the beginning of management. That's helping you create expectations. That's getting your management hat on, and I might have to aggressively, and if I do enter right here at this area, right, with a close above the triggers, I know that this could stop forward progress. I'm not going to sit and hope, because I'm in that transition, because I'm on that weak side. So thank you for that question. What a great question. And guys, I'm going to tell you, the bounce is the direction. I don't know what that means. The bounce is the direction. The direction is up. The direction is nothing but up. Nothing but up. No. The bounce is from the direction. I know you're typing left-handed. Can you take a picture, and are you talking about the bounce down here to go with direction? Did I not understand the question? Did I just do a whole lesson that you didn't need? Maybe somebody needed it. Are we talking about this one? Hold on. When it pulls back to the area, the most likely spot for a bounce, close on the correct side. Oh, I did nail it. Whew. Sometimes, as a man, I don't communicate. Oh, I asked too many questions too fast. Sorry, David. Sorry about that. I do that sometimes. Thank you. I need you guys to keep me in line some days. But this is a good example. Depending on where I am in relation to the small triggers on the large chart, will gauge how aggressive I manage at this trouble spot. I love it. Great lesson. Great lesson. And look, from the weak side, that's where they start to roll. They're still up, but you can see that they're trying to roll. And if we go through and we just look at them, on the S&P they did roll, and now they're down, and now they're strong, and it didn't get the VWAP, and it pulled right back to the bottom of the zone, and it did close below, but there was no room, right? And because there was no room, it bounced up right back to the zone, and then it closed below, and you may have had a little extra room. And if you were in that trade, your stop is right here, behind the pivot that gets you in. And your target might be that VWAP trouble, but that's an average, and they got super close to it. You are on the strong side of the triggers, so these areas are more likely to break, but not guaranteed to break. And you may say, because of that, I'll put a stop a couple ticks behind this zone, and if that zone doesn't stop the market, I'm going to exit this trade. And guys, I'll risk $50 to make 150 all day long. David, do you have the chart prime indicators on TradingView? Are you using TradingView? No worries. So the chart prime indicator, whoops, wrong one. Market Dynamics Pro. If you go to the settings in it, it puts under inputs, there's a checkbox that says show VWAP. And I lose it every time. But it is in here, and it will have a checkbox next to it. So it's a part of the Market Dynamics Pro. One of the things you can do, guys, if you don't have it, just for grins, you just bought it yesterday, it should automatically come up because that's the way that the workspaces are put together on the site. Let me try again. Let me find it so I can give you a picture of exactly where it is. So under inputs, let me slow down and go. Enable FVG, POC. There it is, right there. So if you guys don't see it, it's that checked box right there that says show VWAP. It's on the inputs from this indicator under settings. But it should show automatically if you download the workspaces from the website. Okay, so you did buy Chart Prime. So we're not worried about the VWAP, we want some Chart Prime indicators. So when you get an invoice from them, when you pay for it, David, you do have to shut down TradingView. And then when you reopen, it should be there. I've gone through this with someone else once. So if TradingView is open, oh, you bought TV? Yeah, so Chart Prime is a different indicator. It's a different vendor. It's what gives you these areas of support and resistance. It's not Nexgen, it's not TradingView. It's a different company that John did a lot of study on support and resistance using supply and demand. And it's proven to be extremely accurate. So it's outside of what we offer. It's outside of what TradingView offer. It's actually an indicator package. It costs about $60 a month, I think. In my opinion, worth every penny. Yes, that's what creates the zones. So Chart Prime, I'll give you a link to it. Here we go. So these guys create through the indicators. Where's the pricing? There we go. Chart Prime Pro. This is what gives you those supply and demand zones that we're using in lieu of fibs right now. As soon as they're done, Miss Claire, as soon as they're done, and in the wonderful world of programming, that's about as close as I can get you. We were hoping it would be last Friday. Apparently, there is a tremendous amount that has to go into creating them, and they're finding little hiccups. And until it's perfect, you guys have met John Novak. Until it's perfect, he won't give them to you. So check it out. It did create a bounce. And now it's pulling back to the midband. And now it's pulling back to the zone. And everything still says down. John said yesterday that they're coming Friday. Right on. John expects them to come Friday. It's going to be up to the programmers. For sure. So check it out. Are the rules still met? Triggers down, strong side of the triggers, room to trouble, pull back to the area. Only thing you're waiting for is a close on the other side of the triggers, guys. If you entered the correct trade when it presented, your stop is still up here above the pivot where the market shouldn't go. If you traded directly into trouble, like we did here to show the close below, trouble did in fact hold. And we've got 20 seconds, 19 seconds before we know if this bar is going to close below the triggers at the area to trade with a large chart. And look at that. That's why I don't try to anticipate closes. That's why this timer is worth its weight in gold, because the rules still aren't met. Pretty cool, right? And we're above the area, so we want our close below the line from the area weak side of the small triggers, and we're just waiting for it to all come together. Does this make sense, everybody? Down, strong side, and right now I'm in a zone that could create a problem. I've drawn a line to show me where the bottom of that zone is, so I refuse. You can't make me take a short trade in this zone. I won't do it. My rules say no. My rules say my entry needs to come with room to trouble, and that is not true if I'm inside the zone. So I drew this green trend line to let me know exactly where my entry needs to come from. And we've got 5 seconds, 4, 3, 2, 1, and technically, whoops, that fits my rules. And my stop goes above the pivot, and my target is either going to be the big chart target or not. I'm not guaranteed a win, guys, but I followed my rules. Smalls down, strong side, below trouble, close on the correct side of triggers. This zone is my problem area. This zone that I traded in is gonna be the one thing that could upset this trade. Does that make sense? Is it worth $120 to make $320 to trade with direction, to trade with the good side of the triggers, to take a close on the small side of the triggers? And then for you guys that are learning how to divvy up your profit targets, change it to 1, and you could say, all right, if they get to this zone, I'll take some of it off. If they can make it down to 59, I'll take some profits, right? Or if they make it to the HVA, I'll take some profits. Or if they get to this zone, I'll take some profits. But we never made it out of the zone on the entry, guys. The large chart gave us everything we needed. The small gave us our rules met, but we're aware, and it doesn't look like they want to give it up. We'll see. We'll come back to it because it's all about simulator. Everything's still set up, still had room. There's that dance again in between the areas from the weak side of the triggers. Look at that spike. So glad I didn't enter without rules met. Would have absolutely annihilated me. Now the small triggers are down. I'm only looking for short trades, not trading into the area. Guys, when we do this on one chart, it'll be easier because we're not bouncing through 15 different charts. Small triggers have rolled. I'm not looking for long trades. They got us. I guess room to targets is true, huh? Room to targets appears to be a real thing. I don't mind doing that on simulator. I don't mind doing it on simulator, guys. So that's 2. Didn't have room. Didn't work out. Didn't have room. Didn't work out. Does that make sense? Are any of you guys on simulator fearful? Are you on simulator nervous? Guys, take them all and post it in the room. Take everything that you think is a trade and go through your checklist and see if it really was. Because if you're a brand new user, you're thinking about the money. You're thinking about the riches that you're going to make. You're hoping that it goes down, and you're not as focused on the rules as you could be. If you said room to targets, you don't trade directly into a zone. If you say room to targets, you don't trade directly into a zone. And guys, this is based on a lesson that has been reoccurring in this room for the last week. Tomorrow we won't do that. Tomorrow we will not take trades directly into zones, because tomorrow we're going to follow the plan that you guys got 100%. Tomorrow there will be no exceptions. There will be no opinions. Tomorrow there will be no I hopes, I thinks, I wants. It'll be simply, can I defend it in a court of law because it fits my checklist? Because this is an educational room. And that was education that's going to pay huge dividends for you long term. Nowhere to go short. That alone keeps you from taking the short trade. Isn't that amazing? All you gotta do is go with the triggers. What's Ninja Trader doing? Divergence on the potential to break. Did anybody recognize that? Have we talked about that today? You want to see how the two come together? That trade directly into the zone that we took was right there. That zone and that fib lined up, guys. I don't care which platform you're on. You'll know where trouble is. Weakness. No areas inside of triggers. And it did, in fact, push lower. And when it hit support with every trigger line above it, that's where it bounced up. It's just patterns. And once you begin to learn the patterns, trading becomes easier. Once you adhere to a plan, trading becomes easier. That's my job.